Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at Twitter and also look at some ratios. Probably going to look at GDX against a lot of other assets and ETFs. Also, SILJ is going to be another one that I might focus on. They're looking pretty good, and I was just going to bring this up. And we're also going to go through a bunch of different companies on the website for the Platinum question and answer session pertaining to precious metals. So I do think that things are positively turning in the right direction for these sectors. At least that's my financial opinion on it. And I'll show you what the data is and what it looks like. So let's dive in. We'll take a look at Twitter first, then we'll go into the ratios second and after. And I'll give you my opinions around all of them. So again, if you want to follow me, it's at finding_finance. So the first one up is Happy Hawaiian. This is a ratio. It's platinum to palladium ratio, still making its way back to 1.0 after bottoming at 0.3 back in January of 2020. Actually, I think it was the lowest portion was in April because that's when I swapped my my platinum for my palladium for platinum. But this is what the chart looks like for this ratio. When it goes up, platinum is outperforming palladium. I got it right on that candlestick right there in April when I did it in 2020. I swapped all my palladium for platinum, and we're starting to move on higher, and I do think that this is going to be a combination of palladium going down and platinum going up. Last time the ratio peaked out at 5.5. I don't know if that's where I'm going to swap it, but anything over 5, I'd be entirely happy to be looking at potential swaps at that time. But the general rule of thumb, at least from what I understand, the way that I've looked at history is palladium does very well in disinflationary environments or low inflation, low interest rates. Platinum does very well under inflationary environments with increasing interest rates like the 1970s and the 2000s. So that's what we're seeing there, and platinum is incredibly cheap against palladium. So here's interesting. Gold is trading close to its all-time highs, and sentiment, according to the Sentiment Trader Opti Index, is still in neutral territory. So this is gold. It's coming up towards that all-time high. This would be a kind of a triple or double top, triple top breakout, or whatever you want to call it. And this is the sentiment indicator here. And we're still about halfway on the sentiment. So that's pretty good, where we could get a good run out of gold, perhaps, until we hit overly bullish sentiment. We've got another one, gold, Dow Gold equals 1. It says, unless gold reverses hard in the next week, we will have a cup and handle breakout on the quarterly chart, activating a measured move target to $3,500. So this is your cup, this is your handle, this is your lead-in coming on up, and this is the well, I call it the neckline or the line for the cup and handle. I don't know what to call it for a cup and handle, but look at us peeking out over here on the monthly candlesticks. If we can close, actually this is quarterly, if we can close on the quarterly candlesticks, this is going to be a big breakout, guys. And again, the measured move is $3,500. $3,500. It's going to do incredible things for some of the companies that are gold and silver companies. So it looks like we're lining this up. The market conditions are also conducive for this to happen. It's the yield curve that's inverted becomes a little bit uninverted. And that's generally when gold starts to take off. Now, silver follows, but it's usually lagged behind it. So gold is the leader here. And when gold goes, some of these mining companies may or may not go with it, depending on a slew of things. Precious metals, like the physical metal, is by far the safest way to play this. You can obviously go in the mining companies, but it depends on the market conditions for the mining companies and how high oil goes, and a bunch of other things as well. But this does look good to continue higher, looking at this chart here. We've got gold is about to reach record prices on a monthly basis. If historical correlations matter, it is hard to believe silver won't follow the same path. That alone would imply 110% return from its current levels. Relative to the M2 money supply, silver remains one of the cheapest, here we go, tangible assets in the market today. If the current inflationary issues prove to be structural, we are likely entering a secular bull market for precious metals. I agree. And what he's saying about 110%, that is the gap between gold and silver here, and it needs to basically outperform gold by 2.1x. So silver has to go up over 2 times as much against gold to catch back up to it from historical ratio valuations. Coming on down. Let me back out again. There we go. Chart of the day, U.S. petroleum. Okay, so I went over that. Let's go over some ratios. So I've been going over a lot of gold, a lot of silver ratios. Let's look at some of the ratios here. This is GDX versus gold futures. And we still haven't broken out of this pattern here. You can also throw basically a downtrend line here. So we've broken the downtrend line there. So we usually have a move lower, a move sideways, and then eventually a move higher. We're at very low valuations for GDX in relationship to gold. And what we're doing is we're waiting for the right market conditions for humans to interact with each other and prefer gold and the gold silver mining companies over other assets. Those market conditions generally happen when not a lot of things work outside of gold. And then people start running at it. So I think the market conditions are there. I think it's all aligned. We're just waiting for people to head towards GDX more so than gold. And gold right now is in favor. That's what we were looking at with the cup and handle pattern and all those other charts that we were looking at. So GDX is just lagging a little bit behind it, and it's very cheap. GDX versus REMX, we can see a megaphone pattern, and we're starting to break to the upside of that megaphone pattern. So GDX is looking incredibly good for an outperformance against rare earth metals. So that looks pretty cool, and I think we could obviously head somewhere up in this general range again with time. Looking at GDX versus SILJ, SILJ looks really good. It's very cheap. It's basically more or less the gold to silver ratio chart, if you know what that looks like. But we're coming back up. We're going to test here, and then I think we're going to break back down while silver junior companies may outperform GDX. You got to be careful what companies you choose, though, because some of these companies are pretty much duds. And there's a whole bunch of them, too. We haven't seen that reversal yet, but I do expect it to reverse back down at some point. GDX versus URNM. So this is GDX versus uranium mining companies. I can throw a trend line on here, and it looks like almost an inverted head and shoulders. Shoulder, head, shoulder. And we're getting a breakout here. So GDX looks really good in relationship to uranium. So this might be a game changer. If you guys are staring at other charts or whatever, GDX looks really good in relationship to a lot of different assets. GDX versus XOP. Yeah, XOP, I mean, GDX looks good. It looks like it wants to roll. So if we back out here, let me throw some patterns on here. We've got kind of this here. And we broke through it, came back, and looks like we're doing a retest move, and now we're starting to move higher. The momentum's there, and there's a bunch of companies that are lagging behind in the gold and silver indexes that we can find and invest in. And I do think that we could see an outperformance of GDX in relationship to XOP. The market conditions are looking more and more favorable for something like that to happen. So, yeah, it's looking pretty good for the for gold. Let me throw this up here real quick. There it is. Boom. GDX versus COPX. We're at a very low level for GDX in relationship to copper, the ETF itself. This also has, it looks like, I'm going to try to put some in here. It looks like we've got some sort of megaphone pattern going on as well. to some degree. I know it's not perfect, and we're at a very low level. We're bouncing up to the upside, and we've got a lot of runway ahead of us for GDX to outperform copper. Looking at GDX versus OIH, which is the energy service companies. Energy service companies are really cheap, but GDX does look like we broke out. We're doing a retest, and it looks like we're starting to move to the upside, breaking this downtrend here. And we just broke out of this stuff here recently. And we might get a little bit of a retest here before heading higher. But that looks really good for GDX, as weird as it is. And I'm not a fan or not a fan. It doesn't really matter. It just looks good for this ratio for GDX to outperform. SILJ versus silver, it's still moving down in a downtrend for SILJ in relationship to silver. There's your kind of your downtrend line. And yeah, you can put it up here. It doesn't matter where you put it, as long as we're kind of consolidating. And here's another line here, kind of at the bottom here. You can kind of draw one through here. I'm not going to draw it, but it hasn't broken out yet to the upside, SILJ versus silver, and that usually lags behind. That generally means there could be some opportunities in SILJ. SILJ versus OIH, which is also one that we're looking at. Basically, we've got a breakout here, a breakout, and then a big fat retest, and then I think we'll move on higher. And some of the companies and some of the sectors are like here that are still coming on back. So I think that GDX and SILJ are leaders, and most everything else like uranium and copper and XOP, which is the oil exploration production companies, they're just lagging behind a little bit. But this looks really good for outperformance of SILJ versus OIH. Keep hitting that wrong button there. There we go. SILJ versus XOP still looking really cheap, very cheap down here, and it does look like it wants to eventually work its way on up. We've got SILJ versus URNM. That also looks good. You can see a trend line I threw in there, a breakout, retest, and maybe even a move higher for SILJ outperforming URNM. SILJ versus REMX. That looks like it wants to break out here. Look at the history on this thing. Wow. These moves are just ridiculous in there. And that's from 2015 up. That's from 2018 up. And these also correlate with the yield curves inverting and uninverting. Yield curve was inverting here. Yield curve's inverting here. And this was uninverting and uninverting. So crazy, and it does look like we are ready to break to the upside here in a shoulder, head, shoulder with a neckline here. Ready to break at some point. SILJ versus COPX. This is the copper ETF. Very cheap for SILJ, way down in no man's land. So obviously very good and very cheap for SILJ. SILJ versus TAN. TAN is the solar ETF. And we are very, very cheap, and looks like we are trying to break to the upside. SILJ is to outperform TAN as well. So given all of that information, I know I focused on GDX and SILJ, but I think that's probably where the next areas might be for potential returns. So looks really good from a ratio perspective. I'm going to start digging through a bunch of different companies and obviously sharing it with everybody on the website, what those companies are, and bring your favorite companies. We can chart them out. We can see what they are. I've got my natural tendencies. I tend to go towards the cash cows, so to speak, but some of these resource sectors, they just don't have a lot of cash cows, so to speak. They don't have companies making a bunch of money. So it makes it a little bit more speculative, a little bit more dangerous and risky, and a little bit tougher because, you know, I'm not the expert for developers to know which ones are going to be successful and which ones aren't. I'm a retail investor looking for potential opportunities, and this is how I'm finding the opportunities. But we'll talk a lot about the companies this coming up platinum session, question and answer session. That's at Sunday, 5 p.m. Mountain Standard Time. And if you guys want to join the community, definitely sign up. We're going to talk about a bunch of those opportunities, and I'll give my opinions on ones that you guys find as well. All right, guys, that's all I've got for today. We'll catch you next time. This is Finding Value.